Hello and welcome to this April edition of Property News. Today I'm going to give you an update on the UK economy, talk about what's happening right now in the property market and give you some real investor insights for the next couple of months. So my name's Tony Law from Your First Four Houses, and my channel's all about helping you replace a job-based income with just a handful of investment properties so that you can give up the day job if you wish and go and do something more interesting with your time, like learning to paint. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. By the way, before I dive in, I do apologise for having been a little bit absent for the past few weeks. To be honest, I've been a little bit under the weather, but I'm absolutely fine now. So let's start things off by looking at the economy. As we all know, on Monday the 29th of March, lockdown finally eased again as we returned to the rule of six. And of course, the next relaxation in lockdown happens on the 12th of April. Although it's clear the pandemic will be with us until at least the autumn and there's talk of a third wave, there can be little doubt that there's a real sense that we are finally moving out of this pandemic. But has the pandemic itself actually changed us as a society? A study by the BBC and King's College London in March suggested a potentially permanent change to people's lifestyles, even if only in a subtle way, post-COVID. 40% of those surveyed stated that they were doing more exercising, and in particular walking was one of the main exercises. 32% said that they were going to be doing more working from home moving forwards. 31% said they were shopping more locally and intended to carry on doing that, and 23% of the whole country and 31% of the occupants in London said that they would be doing less commuting moving forwards. The implications of these changes could be huge, and perhaps I haven't got the time to go into it here, but you need to think about those changes. How will that affect the property market in particular moving forwards? Interestingly, unemployment actually reduced by 200,000 in the 3 months to February amid signs that the jobs market may be stabilising. This comes amid growing optimism that the vaccine rollout will lead to a faster than expected economic recovery. And the official unemployment rate now stands at 5%, down from 5.1%. Although sadly, those under the age of 25 continue to bear the brunt of all job losses. Santander announced in March that it will be closing 111 of its UK branches as customers shift more permanently onto online banking. Now, the truth is the pandemic has obviously accelerated this trend, although in-branch transactions had actually fallen by a third in the 2 years before the pandemic itself actually began. And John Lewis announced that it's going to be closing 8 more stores. Obviously, whilst the closing of these flagship stores is in itself a tragedy for those people that work there, what is often overlooked is the huge impact those losses have on all the smaller shops and businesses that benefited from working alongside them, purely because of the pull that these retail giants obviously have. By the way, if you're finding these updates helpful, it would just be awesome if you could click on that like button down there. It really helps me if that's okay. So let's move on to property. So first of all, house prices moved up again in March by 0.8%, making the average asking price for properties in the UK £321,064, with agents stating they have had the strongest spring sellers market for over a decade. The number of potential buyers inquiring about each property in March was actually at an all-time high and is 34% higher than the same period a year ago, which was itself a really active market before the first lockdown. With sales already agreed for almost 2 out of 3 properties on agents' books, buyers are eagerly awaiting new stock, possibly making this the best sellers market for years. So all of this means it is, if I'm being really honest, currently a bit more challenging trying to find fantastic deals if the only way that you're looking for those deals is via Rightmove and estate agents, which is why I'm always encouraging investors to market direct to sellers wherever they can, but maybe I shouldn't open that can of worms now. The much promoted Green Homes Grant that was introduced to help owners insulate their homes in England was scrapped at the end of March, with the grant reaching just 10% of the 600,000 homes that the Chancellor promised would be improved. The cash that was allocated to the scheme will now be used to fund green schemes run by the councils, although I guess we'll have to wait to see just how successful that is. According to Property Notify, estate and letting agents using the live stream viewing app Gavel have had to carry out 16,000 fewer physical viewings since the application launched back in May of last year. Instead, these physical viewings have been replaced by 1,430 live stream open house viewings, with an average attendance of 11 people at each event. Even post-COVID, it looks likely that agents will continue ramping up virtual viewings because, to be honest, they save on a huge amount of time, effort and admin compared to physical viewings. And I think this is particularly interesting when we start to think in terms of doing maybe open house type viewings when it comes to HMOs in particular. Lastly, on the property front, UK holiday lets have gone absolutely bonkers, as I'm sure you're aware if you've been trying to book a holiday away in the UK this year, with many properties already stating that they are completely booked up for the whole of the summer. Okay, so let's move on to a few of what I call my investor insights. But before I do, these are just my best guesses based on quite a lot of research and quite a few conversations, and I may well be wrong. You need to do your own due diligence on everything, and in particular, severe due diligence on any deals that you may be looking at. So first of all, UK holidays this year may be booming, but can I predict the opposite next year? As more worldwide travel opens up, I think that people may be next year opting absolutely to travel away. So I'm predicting a little bit of a slump in the holiday market or the holiday rental market next year. But again, just my best guess on that one. Like many people, I'm now definitely predicting a mini boom in the economy this summer as the country starts to open up and there's this generally positive sentiment as the vaccine is starting to kick in and really having a great effect, let's be honest. And also because lots of people seem to have seen that their expenses have gone down during lockdown, and as a result, their savings have actually gone up over the past year, so that they currently have more cash that they can spend moving into the summer as all those shops start to open up. With the stamp duty holiday ending in September and furlough ending at the same time, I have a question to ask you. Do we think that it's around about that time that we might start to see a little bit of a slump? Now, I'm really cautious with these types of predictions now because I got it wrong last year, like so many other people. But I do honestly think that the combination of those two, unless the government moves the goalposts again, may well see the autumn period be the time when we start to have a bit of a slump. And this was actually something that I was predicting back in my January update. But obviously, again, it all depends on what the government does and how they react to the situation. If you're advertising for sale or for lettings, can I strongly encourage you to start overusing phrases like home office, large garden, plenty of space. These types of phrases are absolutely being searched for on Rightmove at the moment. And make sure that any photographs that you're taking are kind of making those things really, really clear. With HMOs, can you perhaps consider incorporating some kind of home working potential? Now, we had a great conversation about this, or this is a couple of months ago, that somebody in my online property masterclass program actually brought up. And I'll be honest, it wasn't something that I personally had really given much thought to before. But making your HMOs more of a kind of, or have the potential for more home working potential, I think there's real mileage in that. Either space within the rooms themselves, if you can allow it, or maybe more in the communal space. I'd encourage you to investigate that if you're looking to buy or expand your HMO portfolio. And lastly, can I suggest that if you're one of those people who wants to start investing in property, maybe now is the time to give up that mindset of trying to time the market so that you only buy at the bottom. This is one of the biggest reasons I think people don't get active in terms of property. They're waiting for the slump. They're waiting to buy at the bottom of the market. But honestly, that is such an incredibly difficult thing to time. I can't do it, and I know so many other people who are really experienced that would themselves say that they themselves can't time the bottom of the market. The core and key thing that you should be doing is actively getting out there and looking for incredible deals, because even though it is a hot market right now, I promise you there are still motivated sellers out there, motivated for good reasons as well as negative reasons, that are willing to work with you, that are willing to give you a good level of discount, and crucially be really happy to do so because you're solving their problems. I really hope you found this update helpful. I promise not to delay videos in the coming weeks, and I'll look forward to seeing you in the next one.